Hello friends, and welcome to my YouTube channel Simply Stocks. And today I'm going to talk about Ultramarine, a very interesting chemical company, whether it is a buy at current levels or an avoid. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position into any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. Before I talk about Ultramarine, here's a small request that kindly support me on Patreon, and once you do that, it will help me grow the channel, help you also ask me questions in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and number of podcasts that I put up on short-term and medium-term calls. For detailed company or market talk, or you want one-on-one discussion on number of stocks you're holding, you can directly email me and we can work things out with a fee. Now about the company. Established in 1960, Ultramarine is the largest manufacturer of ultramarine blue and synthetic detergents. Manufacturing operations are mainly in Chennai. Also produces surfactants, detergents and ides. Serves a number of industries in dyes, detergents, washes, etc. Number of consumer companies are attached to it. They are having clientele in that space, and market cap of the company is around 1000 to 1200 crores. If you look at the numbers, then sales were up 14% to around 83 crores in the December quarter that just passed by. But the EBIT, earning before interest and taxes, were up 35-36%. Absolutely no debt. The profit was up around 35%. A high promoter holding is there. A return on equity of 17%. Operating profit margin of 28%. So numbers are extremely robust. Numbers are very strong. And similar to most of the chemical companies which are doing extremely well, Ultramarine is also producing top class numbers, and that's why the stock is performing well. If you look at the performance, so stock has done really well over the last 2 months. So over the last 2-3 months, stock has surged a lot from January onwards. Stock fell 35% from Feb highs in 2020 crash. So there was a you can say a fall of around 30-35%, and have been an outperformer since 2018 July. So actually what happened was between 2015 to 18 it didn't do that well, but later on from 2018 July it has been consistently going up and has been doing well. There was a correction of around 30-35% during 2020 fall that we had all across the board, but later on now it has recovered smartly from those numbers, and recovery has been sharp and quick over the last 3-4 months. It has gone up something like 3x from the March lows of 2020. So it's up 3 times from in last year. So it's 3x from the lows. So it was around 100 rupees. It's now 315 rupees. Company has been resilient in difficult environment and has been producing very good numbers when economy has not done that well. A decent promoter and institutional holding is there. So all in all, very positive for the company and very positive for the businesses altogether. What has been the reasons for the upmove or reasons for the positivity in this sector as a whole and for this company? Margins have increased sharply over the last 1 year. Consistently they have produced 20-25% operating profit margin, and even close to 28% in some quarters. China being shut down, or China producing lesser emissions, and so most of the chemical firms are shut down there. That has also helped Indian chemical industry, and Ultramarine is no different. Getting more clientele from abroad and getting more businesses is what the company has been doing. Over the last couple of years, the debt has also reduced. So from 2018 onwards, or FY18 onwards, it has been around 3 years that the debt has consistently gone down, and that is an extremely big positive for any investor who wants to invest into a company, that company is having lower debt. Remember that critical chemicals are in huge demand, so we are looking at some of the products that Ultramarine sells, and they are the largest producers in some of them, Ultramarine blue, etc. uh, those are in demand as consumer sentiment changes and consumers are looking to buying into more products of detergent, dyes, etc. People are painting their houses, painting their cars, etc. There's more usage of the car, so the usage of the chemicals that Ultramarine is producing is immense and in different industries. And as economic recovery takes place, indirectly companies like Ultramarine is getting benefited. So serving a gamut of industries, a number of companies are there, and the valuations are still attractive. The way the fall took place when the stock fell to something like 100 rupees, when the fall took place to around 100 the valuations were very attractive, and eventually the stock went up because of that. So these were the reasons for the up move from those levels at 120 rupees. With such kind of a business at such a low market cap of around 300-350 crores, the company looked very good. If you look at the technicals of the stock, then there is strong support between the 320-350 region, although the stock has fallen below it. So if it comes into that range, then we could expect a greater up move. The 200 DMA is around 260-265, and the biggest breakout can be expected over 390. So even if the stock goes past say 320-350, that would be a good level to probably get into the stock and accumulate. So current levels and up move till 350 are good levels to get into the stock. Any move to 330, not dips but move to 330, would be huge buying opportunity. I made this presentation about 2-3 weeks back. At that point of time the stock was higher. Today the stock is around 315. So stock may still go into consolidation between 320 on the lower end and 380 on the upper end, and that will be a very good range to accumulate over the next 4 to 5 months, and then look to invest over the next 3 to 5 year period to make money in the stock. It is good for a trading play as well. With a stop loss at 300, one can get into the stock. So what needs to be done? In my opinion, buy on major declines and at current levels also. I believe that at 1000 crores the market cap, or 800-900 crores the market cap for such a business is extremely low. I believe that this can still be a 2 to 3000 crore market cap company. If you have, then hold an average on dips and don't worry. The stock will come back to your buy price unless you have bought it at very high prices. That's a different thing altogether. And I think chemical sector will perform over the next 2 years as well, 1 or 2 years at least. So it's a good buy for a 2 year period, and you could see much higher levels from the levels that it is currently trading at. Because it is a small cap company, then I would suggest that you have only 5% exposure into such stocks. So this was my video on Ultramarine. Please like and subscribe my channel and hit the bell icon so that you can get my videos straight away when I post it. Thanks a lot for watching.